explain to us what this means, why this is happening, and what comes next. We did see the futures move significantly, but the Bank of England was kind of forced to step in. We didn't expect to hear from them again until November.
No, exactly right. I think what happened was there was a budget that was large tax cuts, unfunded, and that led to the obvious presumption that the UK government was going to have to go into the markets and issue a huge amount of debt. That clearly roiled markets, and I think what you saw today was the Bank of England stepping in basically on a financial stability rationale, saying that they wanted to basically keep markets under control and basically also get control of interest rates. And so that's really important. The other thing to recognize is there is a concern that a number of pension funds and others might have to sell bonds, which would have created even more of an effect. So it was really important from a financial stability rationale, and I think the government has recognized that.
Why would the pension funds have to sell?
There are a number of accounting reasons, and I think there was a general concern about how many more losses they'd have to take if there was a massive issuance of new gilts. And so part of this was, I think, to hold on to or avoid future losses in terms of capital gains.
This is a huge issue for the UK government. You think, we were just speaking with Mohammed El-Arian, who thinks that they need to step back on this unfunded tax cut proposal, at least on that part of it.
That makes sense to me. I mean, the market clearly says that they lost confidence in this, new incoming government. The prime minister has been prime minister for less than a week. New chancellor. They come up with a very dramatic swing in policy. And the markets basically said, no, we don't like it, and we're not going to be there to fund it, and interest rates are going to rise.
Isn't a tax cut like fiscal spend? It's the opposite of just spending money, and it's stimulative, and they're trying to dampen demand. So it goes against the whole notion of what the Bank of England is trying to do, doesn't it? It's counterproductive.
No, it absolutely is, Joe. I think it created a great deal of uncertainty as to exactly who was in charge, what exactly the economic policy overall for the UK was. The other thing that happened, obviously, is we saw a dramatic drop in the value of the pound, which creates more inflationary pressures. Yeah. And so it was a double-edged sword. It was a real whammy, and the market did not like it.
This is the point I was going to make. The supply siders that say we shouldn't be crushing demand. We should be increasing supply by cutting taxes and getting rid of regulation, and that way, organically, the private sector does better. But that's what happens. That's stimulative too, isn't it? So you're really handcuffed. The central bankers have a really difficult task ahead.
Central bankers have a very difficult task ahead. You may recall Bob Rubin, I think, famously talked about the value or the impact of fixed income markets, and you see it here yet again. When fixed income investors lose confidence, it drives huge response because it affects interest rates in a way that central banks may or may not control. And I think that's a little bit of the dynamic. And so the financial stability side of the Bank of England came into play here in a very dramatic move.